for joining us today on this edition of Business Daily. I'm Lee Ji-eun in Seoul. Before we get started, let's first get a quick check of today's highlights. Despite sluggish demand and faltering exports, Korea's GDP ranks 11th in the world in 2015, climbing up 2 notches from a year earlier. A steep rise in the Korean won and unpredictable currency swings aren't at all good news for Korean exporters who are already struggling with falling global demand. These stories and more coming right up. Korea's economy has been on a turbulent ride in recent years, with exports sagging and key industries suffering. But as our Kim Mo-kyun reports, Korea actually rose on the world's GDP rankings last year compared to other countries.
Local investment banks revealed Tuesday that data by the World Bank shows South Korea's gross domestic product reached $1.38 trillion in 2015. That makes South Korea the 11th largest economy in the world. South Korea's GDP rank hit 10th in 2005, but had fallen back to 15th by 2008. Between 2009 and 2013, South Korea remained at 14th. From 2014, it started to bounce back, climbing 1 notch to 13th, and finally climbed 2 notches back to 11th last year. However, the results don't mean South Korea's economy actually grew, as Russia and Australia's economies in 10th and 12th respectively in 2004 contracted last year. Experts say South Korea's GDP last year actually dropped 2.4% from $1.41 trillion in 2014, and its gross national income per capita at purchasing power parity dropped 6 notches to 48. An investment strategy manager from Seoul-based High Investment and Securities said that though it's difficult to read too much into the rise of South Korea's GDP rank, it's possible to say South Korea's economy did relatively well compared to other countries. The United States topped the GDP list with almost $18 trillion, followed by China, Japan, and Germany and Britain. Kim Mo-kyun, Business Daily.
Korea's financial authorities are calling for a swift passage of a near $10 billion supplementary budget so that the government can focus on rolling out funds starting next month. Addressing a National Assembly special committee which will review the extra budget proposal, Korea's Finance Minister Yoo Il-ho said the added spending will likely create up to 68,000 jobs and grow the economy by 10 to 20 basis points this year. He said it will particularly help regions struck hard by drastic restructuring and subsequent layoffs in the shipbuilding sector. The minister added that all this will be possible only if the budget is fully spent across the span of 4 months from September, and urged lawmakers to pass the bill at the earliest time possible. Over half of the companies listed in Korea's benchmark Kospi fared pretty well in the second quarter. According to market researcher WiseFN and Hyundai Securities, 80 out of 158 firms that reported second quarter earnings as of Thursday posted operating profits exceeding market estimates in the April to June period. Earnings surprises were led by tech companies, shipbuilders, chemicals manufacturers, and oil refiners. Samsung Electronics put out its biggest quarterly operating profit in over 2 years, driven by strong sales of its latest smartphone and cost-cutting efforts. With major companies posting positive results, the combined operating profit of all listed companies is estimated to have surpassed the 40 trillion won mark, or about $36.4 billion for the first time. And along with strong earnings, Korean companies' cash reserves have reached an all-time high of 614 trillion won. Money is easier to come by thanks to record low interest rates, but finding a good place to invest it appears to be a different story. Our Eunice Kim has more.
614 trillion won. That is the largest pile of cash Korean companies have ever sat on since records were kept in 2001. This comes as corporate cash reserves bloated past the 600 trillion won mark for the first time back in March this year. After dipping the following 2 months, it shot up to an all-time high in June, expanding by 18 trillion won to reach $561 billion. Instead of using easy access to liquidity to expand investment and create more jobs, Korean companies appear to be taking the safe route by holding onto their money. In fact, a survey of 600 top corporations by the country's largest business lobby had found that pessimists outnumbered optimists in all of the months of the year so far, except for the month of May. As a result, facilities investment in the first half of the year saw a decline of 2 to 4% year over year. That is the first drop recorded in 2.5 years, just prior to the European financial crisis. Also, in the first 6 months, cash held by corporations grew at a faster rate than cash held by households and nonprofit organizations. All in all, raising the question then of whether the record low key interest rate of 1.25% meant to lower the barrier to borrowed money and spur economic activity is having the desired effect. Eunice Kim, Business Daily.
Roughly 1 out of 6 workers here in Korea are expected to be paid below the new minimum wage set for next year. According to the Bank of Korea, the number of people paid under the legal requirement of roughly $5.90 per hour will rise to 3.1 million next year, accounting for 16% of the workforce. Now, that's up 12% from the 2.8 million underpaid workers this year. Those employed in the agriculture as well as food and accommodation sectors are projected to be affected the most. The central bank says despite the rising number of violations, companies exposed for wrongful employment have fallen in numbers, giving them less incentive to uphold the minimum wage. It pointed out the need to strengthen supervision and review the possibility of differentiating the minimum wage by industry. Local prosecutors investigating the emissions scandal that's engulfed Volkswagen are planning to summon the president of the German carmaker's local unit. They say Thomas Kuhl, who has overseen the import and sales of Volkswagen cars in Korea since 2013, may have been involved in forging test results on engine noise levels, fuel efficiency, and emissions to secure approval from local authorities. The move comes a few days after Johannes Themmer, managing director of Audi Volkswagen Korea, was summoned by the Seoul Central District Prosecutor's Office for questioning as a suspect. Kuhl may be summoned as a testifier, but depending on the probe, he could be summoned as a suspect as well. The Korean government banned sales and revoked certifications of 80 Volkswagen AG models early this month. Last week, the Korean won strengthened to a near 14-month high, trading below the 1101 level against the greenback. And now there are growing concerns that a steep rise in the won coupled with sluggish global demand and volatility in the foreign exchange market are fueling external uncertainties. For more on this, Professor Yang Jun-seok from the Catholic University of Korea joins us in the studio today. Great to have you here.
Happy to be here.
All right, so on Wednesday, the won slipped below the 1100 mark against the dollar for the first time in 13 months. What was the biggest reason behind this?
Okay, well, we see a certain pattern here, which is that when the global economy is stable, we see the won appreciate. And then if there's some instability, uncertainty in the global market, the Korean won depreciates. We have seen this pattern since actually after the financial crisis in 1997.
Okay.
So throughout the decade of 2000, we saw the Korean won depreciate down to about 950 range. Then we had the global financial crisis of 2007 and 2008. And 2009, it went up as high as 1450 for a few days. And then it's been roughly depreciating ever since, but whenever we have a global instability, for example, when we had the problem with Greece, when we had China slowdown in China, when we had Brexit, we see the Korean won depreciate just suddenly and then appreciate again. And then we had that good news from S&P last week, which confirmed that Korea is, at least compared to other advanced countries, doing fairly well. So that, I think, also added to the appreciation pressure.
Now, the concern here is the impact that it will have on the already struggling local exporters.
Yeah, when we look at some of the major companies here, the Samsung Electronics says that every time there's a 10-won deep appreciation in the won-dollar rate, it costs them 300 billion won in profits.
Okay.
In Hyundai Kia Motors, a fall of 10 won per dollar leads to fall in sales between 200 to 420 billion dollars. LG Electronics says that 10% appreciation of the Korean won leads to 27 billion won fall in profits. SK Hynix says that appreciation of about 3 or 4% leads to 100 billion won fall in sales.
Wow.
So these companies do say that appreciation does hurt their business a lot. On the other hand, when there's a depreciation, then it helps these companies usually. Samsung Electronics, even though they had a bad second quarter because of the appreciation, they actually had a good first quarter because of the depreciation we had earlier this year.
Okay.
Now, these are the larger companies. The smaller companies, on the other hand, they have a lot of problems because while the Korean won is appreciating generally, whenever there's an international problem, it depreciates suddenly. So we have appreciating trend with a lot of volatility. And that means that while we can roughly guess where the won will be 3, 4, 5 years from now, we cannot really guess what it'll be 6 months into the future because we don't know what's going to happen in the international environment that may temporarily depreciate the won.
Now, I think the problem is that won's volatility has gotten worse compared to other countries. So can you tell us more about this and how this might affect the Korean economy in the long run?
Okay, well, before 1997, before the Asian financial crisis, Korea kept a very tight control on the foreign exchange rates, but after the Asian financial crisis, they let the market forces take care of most of the exchange rate. As a result, if we see the volatility before and after the Asian financial crisis, we see a very large increase in volatility from about 1998 onwards. And in addition, I just mentioned that whenever there's an international crisis, there's a large depreciation of the Korean won. That's happening because, well, Korea is seen as a good investment when the international environment is stable. So a lot of foreign investors come to Korea to invest, and that means they buy won, which appreciates the won. But when there's an international crisis, they try to take the money out and put it into a safe currency like the dollar or the yen. So that leads to a quick depreciation. And because Korea is somewhere between being a good investment and an emerging market investment, we see a lot of money coming in and out very quickly, and that accounts for a lot of the volatility. And this hits the small and medium-sized companies a lot.
Now, how does it compare with other countries then?
Compared to other countries, well, other emerging economies do have a more unstable exchange rates. But for advanced countries, Korea is on a very much bad side. Compared to other OECD countries, we do have a larger fluctuations in our rates.
All right. Well, at this point, we're wondering, do Korean companies have measures in place to, I guess, to hedge against further volatility in exchange rates?
Well, the larger companies, the chaebol groups, they do have some mechanisms in place. They do engage in a lot of sophisticated hedging using derivatives and so on. So even though they do suffer from some of these problems we mentioned earlier, they can cover themselves by keeping different monies in different currencies and so on. It's a lot more difficult for the small and medium-sized enterprises. They don't have enough money to engage in real risk diversification. So they need to take advantage of more products, financial market products that can reduce the exchange rate risk. But the problem is, ever since the Kiko crisis that we had a few years ago, where a lot of SMEs got burned because they thought they were protecting themselves from risk, but they were actually turned out to be engaged in risky speculation, and they didn't quite know the difference, apparently. So now they're very distrustful of these products that the financial markets are putting out for reducing exchange rate risk. So they're very vulnerable because they aren't taking that insurance or they're buying those products.
Now, aside from $1 exchange rates, what about the 1 yen and 1 yuan exchange rates?
Okay, well, the yen is actually strengthening against the Korean won. So actually that's good news if you're just talking about Japan-Korea comparison. But we're weakening against the Japanese yen, but we're strengthening against the Chinese yuan and the euro.
Okay.
So it's making us less competitive in those places. And obviously, but dollar is actually still the most important currency because most of our international transactions still take place using the dollar.
Right. All right. Well, I know there are a lot of uncertainties out there, but still, what's your outlook on the Korean won from here on out?
Okay, well, the appreciation trend has been taking place for quite a long time, ever since the global financial crisis. And I think even though a lot of companies don't really want to face the fact, I think they have to get prepared for a stronger won over the long term. But we are still going to have those large fluctuations. And what I would do is I would encourage the SMEs to buy those risk diversification products, risk reduction products. Otherwise, they're going to be just very vulnerable.
Right.
And because the international economic environment is still very unstable, we have the Brexit, we have China slowdown.
And the U.S. presidential election.
Of course. So it's going to be a lot more fluctuation. And small and medium-sized companies, unless they protect themselves, they're going to be especially vulnerable in this troubled times.
All right. Well, thank you so much for your insight today, Professor.
Thank you.
And that wraps it up for today. Thanks so much for watching, and we'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.